All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for Saturday night. We'll start with Chi Wing Chong's RL30 slope z-scores of key sectors. And start, as always, with the S&P, which is the upward slope has cooled off a little bit. The fact that it's at above 1 means that it's still sloping up. It's just that the rate of slope has reduced somewhat from 1.5 where it peaked. This is a handy tool to help us detect turning points in sectors when their rapid improvement starts to cool off, like it did in energy, which gave us plenty of warning in this region that the outperformance of the sector was over. It allowed us to improve our exits. So with that in mind, we see that S&P and tech have both cooled off, are still above 1.0, while materials and finance are still better, but have cooled off more from their period of way over performance. This tells me that it would not be surprising to see technology begin to resume its normal leadership role in an upward trending market, while energy continues to be cyclic, based on the price of oil. So still positive slopes, but I'm looking for XLK now to start taking the lead. This compares the aggressive XLY consumer discretionary sector of the S&P against the conservative, defensive-minded consumer staples portion of the S&P. So you can see that staples has been really the source of strength of S&P throughout this upward period, whereas consumer discretionary has been lagging, and that's generally been true to allow us to get into things that are more like McDonald's, Coke, Home Depot, the pharmaceuticals, and things like that. But what I would notice here is that XLY is starting to resume its strength while staples and the market are cooling off a little bit. So this is more of a shift towards the growth mindset, the more aggressive companies in the S&P, and I would expect that to carry over into growth in tech as well. These are not tech companies per se, but they are the more offensive-minded, if I can say it that way. So that's a subtle shift in the market right there. All right, into Ken H's charts, for which we are grateful. Oops. Sorry about that. All right, so we're looking at the Qs, and we're looking at a weekly, daily, and a 65-minute. So that's basically the hour, but what it does is it gives you 7 equally sized chunks during the day because the market's open 7.5 hours. So 65 minutes allows you to get a cleaner container, if we can say it that way. You can see he trades the Qs a lot on the swing. I will notice that the generally lower lows have continued, and this little retracement recovery run of the last couple months is really the same thing that we've seen in this channel, and it was kind of scheduled to get here, is what we would say. And if this is like it always has been during the bear, then we would not be surprised by it peaking right around here and then returning at least to 260. And then if it continues, we would say that's going to be around 230. Now that's if this entire bracket remains true. What it always feels like is that this time it's different, that on this recovery run to here, it always felt like it was going to continue to go, which is what makes these sell-offs so painful. So once again, we find ourselves on an upward surge. That's what this looks like. This surge here is nothing more than that leg on the weekly. And so, while this does feel good, we've also got to be mindful that from this critical state, not only might it go up to 330, but it can also come back down to 260 to support, and then if it continues on down to about 240, 230. So what's it going to do? Well, we don't know, but we can follow price. So in this little recovery, which feels like some Kata 2 action, we can notice that he shorted here, second position, covered. He tried the long, and it was a quick exit. That is the entire essence of short-term trading with swings in a nutshell. He is aligned primarily with the major trend, gets paid on two positions, but is mindful that at boundary conditions, this might be the place where it turns, and so he is willing to try that, but doesn't stick around long. It's, you got to show me, is what he's saying. And then that becomes a stop and reverse. When the long side fails, this becomes a stop and reverse with a second position. He considered a third position. He took a third position and then cashed the whole shooting match right here. Then after this turning point, he notices on the intraday that there was a 1, 2, 3. This yellow dot shows a Kata 2 after a horrible sell-off, which he notes on the daily. He doesn't take it on the intraday or on the daily, but he simply is noting these price improvements. The one he does take is this one after a clear Kata 2. If that one doesn't work, he considered this one, but because of the recent failure, he doesn't take it. That's prudent. He does take after the gap with a stop down to here. He does take that one because it cleared the hump, and it's testing this hump, and this actually feels pretty good. So he is venturing into this, that price action with these higher lows is negating the pain, and that it has cleared this key resistance, and that this may be that next leg up. Well, what he's really betting on now is this idea that at this boundary, that we may be seeing the breaking of this entire downward cycle. On the daily, that's a little easier to see because you get this kind of a double bottom Kata 2, and it has cleared this hump and is now ready to go. That with the first target being around 305. So with an entry around 290, with about a $10 risk, he's betting on a price move from 290 to about 310. So there's a $20 gain against a $10 risk. So he's got a 2-to-1. And if that works, this thing can get all the way back to 330. So that's carefully measured using multiple time frames and trade location, support and resistance to make things work. I'd have you notice also how the Bollinger Band channel has also reversed in here. So now here's the Z1. That has turned. So the turning point feels like this might be that support level. And again, it's supposed to feel like that. But we're going to just treat this we're going to treat this with a lot of respect and realize that the downside could take this all back to 250 or 240. Okay, so he's in good shape there. I think that he might consider, if he's looking at a second position. Here's the risk box. If he takes a second position up in here above 294, that I would bring my stop from here and try to get that, at least get the first position in the money. There's no hurry to make that second entry, but there's good reasons to believe that this whole thing here could hold, and that you want to get in early. So, an interesting one to start off with. I mean, particularly if it turns out that tech is going to start resuming a leadership position. Now, if you know that, you can then drill deeper into the tech area and realize that there's some unusual names showing leadership, like Cisco and IBM, which are ahead of Microsoft, which is well ahead of Apple. And while the other big names have been getting smashed, these two little guys, along with Honeywell, have really been doing well. So he's identified that shifting strength early, and now determined that Cisco is an early leader in this. And you'll notice that he gets not the COTA 2 break. He doesn't get the COTA 2, could have. Doesn't take the SSC, could have. He was willing to hold for the breakout above this congestion. That's more like an emerging dragon. At this test of the top of the dragon or the RL30, he was willing to invest in the second position, and now that held support and is now looking straight up. So those two entries feel pretty good. And then I would say if this gets above 50 and tech is strong, Cisco is a long-term winner. Because at above 50, you can see that over here on the weekly, it has cleared all of that crap. And this is not resistance in here. That move to 55 is not resistance. The resistance occurs in here, around 56. So the move from 50 to 56, and he's already got two positions in the money, could really pay off nicely. He's well above the daily resistance over here, which was this. And now this Cisco is in great shape. It was tentative over here. Notice that he took that position after it had cleared all of this congestion. That's all of this right in here. Cleared that. It's above that statistical resistance at 46. The upper limit of that 46 is here. Notice the power of the peak of that R10 showing you what the actual lid is. So if it breaks above 46, this is free and clear. That's free running. It's leaving the resistance behind. And that's what this looks like. And he's able to get two quick positions on it. And this is still COTA 2 and looking to go. So great shape on Cisco. Team, Atlassian Corporation, a technology sector. Now, this one is much earlier in the life cycle of a reversal. This used to be at 300, at the end of August. And that thing has sold off down to 120. That's a minus 60% haircut right there. That support that used to be at 180, that vaporized. But it's been holding for 5 weeks between 120 and 140. It held support down here that long after that last pain and responded with a move from 180 to 300. Folks, that's 100% gain. It doubled from 180, almost up, maybe 80%, from 180 to 300. Yeah, sure, this thing used to be at 500, and this sure was painful. But that last breakdown and gap down, it has held support, tested twice, and closed well on Friday. And it's right at a critical state. And here's a gap. So if it can break above this level, here's what that means. A bunch of people got murdered in this sell-off. The value players bought it and made their move from 115 to 145. That's a 30% gain. So nobody turns their back on a 30% gain. That's a gain that's worth preserving. So when it gets here and no new buyers show up, there's test 1 and test 2, and then all those guys cut and run until the deep value players who say, look, we'll always buy it at 115. And so buyers come in again. They push it up leg 1, hold, it held, leg 2, and now it's back at the test at 145. This is all psychology. But what I want you to notice is that there was no decision making going on inside this gap. There's nobody in here that bought and then watched it fail, and then now that it's recovering or want to get out to get their money back. You don't see those people until the people who bought at 175, and maybe they held all the way through here. So what I'm saying is in this gap between 145 and 175, there's no latent selling by people that are just trying to get their money back baked into the cake. Once this clears about 145, you don't see resistance until 175. And so if price were to get inside this region, you would see that being greeted warmly by all the people who had bought down here and maybe want some more, or people that were waiting to see this support level or resistance level breached and are now going to rush in and start buying. So that's what this little pattern looks like. That notice that the dragon is turning and that the PSAR is about ready to flip. That PSAR flipped and is ready to go. And then on the intraday, you can see that it's already had the Kata 2 formation, and now it's testing the emerging dragon. And if this breaks to the upside, a move to 175 would not be surprising at all. And that's a favorable reward to risk ratio. So like you could buy this with even a $5 risk. A move from 145 to 175 is $30 of potential gain. And if you're looking at a $5 risk, you've got a 6-to-1. That gives you a little bit of wiggle room for how you want to play that. So this is in great shape. This would be a Godzilla play. Why is it a Godzilla? Well, because it's at the bottom of the 150-day sell-off, 150-day range. It's in the bottom 10% of that. On the daily range, going back 30 days, it's in the bottom here, and the 5-day volatility is large. So this thing is starting to expand to the upside. So team, nice little Godzilla, ready to go to 175. Netflix. Let's see what we got going on here. So this was at 700, sold off to 160. 700 to 160 is minus 540 on 70. That's about a minus 85%, roughly speaking. But the move from 180, or call it 160, to 320, that's a 100% gain. And it has 1, 2, 3 legs up. So that's a deep value play that's already kind of well established. Here was the last support level. Here was Ken H's breakout long. He thought about exiting there, should have, somehow. Yeah, super busy, missed the exit, poor management. We agree, because you suffered all the way down here. Now, where could he have been? If he wasn't so busy, that's a logical exit. When this breaks, that's a logical exit. When this breaks, that's a logical exit, because all of those, 1, 2, 3, allow him to turn this into a favorable swing trade. At this break, I'm just going to beat him up and say, look, you had to scratch there. You held to here. That's like buying it here with your standard risk box and ready to take a 1R loss. And the reason I say that is because you could take this as an SSC, this is a COTA 2, this is a COTA 2, and that's all a good trade. And so he's able finally to get out of this thing with a sense of relief and good fortune. And he gets out approximately the same level he should have before, so he's willing to just have gratitude. In fact, he's so grateful, he doesn't even wait to see the far side of the hill. And it's a lot different feeling to have made bank here, and now you can just stalk this to see what's going on. Now, after having flirted with disaster, he considered the SSC, didn't take it. There was a emerging dragon available here, didn't take it. Here's the next peak, the peak of the dragon in the RL10, so there's an emerging dragon here, which he considered. Now he's back in the zero state, so he's going to just leave all this good luck and anxiety and all that behind and mark it up as a learning point. And now he's going to consider this on its own merits. We're just going to wash the slate. All is forgiven. It's well above the resistance levels. It closed well, and then the close, going into the close, was pretty good. Over here, it's above those support levels and free and clear. And as we look at this pattern, we realize that the next significant resistance is up around 400. So he's essentially got to move from about 320 to 400 to work with. So he's got $80 to work with. So if you took a long at 320 and then said, I'm going to give it to 280, if you were going to take a $40 risk, your upside is 80, your downside is 40, you still have a 2-to-1. So you could frame that trade using the stop at 280 as a reasonable swing and give this thing lots of room. And that would give you a stop right down here on 280. You might also say, let me take the previous resistance and say that that should become support if this thing is going to work. And now my stop only needs to be around 305. So now from 320 to 305, I've got about a $15 risk. And now my 80 over 15 feels like 6-to-1. And I could actually have a larger position, twice the size, and still have a $15 risk and still be relatively safe. So that feels pretty good to me. So lots of lessons to learn on that one. U.S. Steel, meanwhile, crushing it. I want you to feel that this thing has cleared all of this. That little emergent move. Here's your next resistance, and then here's your next resistance around 36 and 33, and it's around 27. So that's plus 6, and that's plus 9. Let's see, 9, yeah. So with even just $1 risk, you got large reward to risk possibilities here. So here's his trades. This one he let it roll over, I think, too much. So scratched the second position, but made a nice move on this one. Re-enters, gets paid. Tries it, should have gotten out here, but suffered this. So let's clean that up. Here's some rising lows in the R10. There was an emerging dragon. He waited for that got his mind right. He considered a second position, but now he's holding an entry from 23. These were the two second positions he considered and did not take. So what to do now? Well, it's well above that resistance level. Everything is good. There's plenty of room for this thing to get to 30, 31. So I think he could consider a second position now if there's a continuation at 27, because he's got an entry from 23. He's got $4 in hand. So if he puts a second position on around 27 and then uses 26, he's got $4 in hand. He might be risking 1 on the second position, and he has a possibility of getting up to 30. So there's at least 3 to 1, and if it gets past 30, it could get to 36. So this one feels pretty good. U.S. Steel. This is a measured response to price action. This one is well out of the noise. You've had 2 pullbacks, both of which held, and it's still looking higher. That is really money in the bank, and that gives you a little bit of comfort. So the courage that it takes here is the courage to hypothesize that those things are done. Notice that he's got a reason to believe in that the support levels here and here held, that the resistance levels here and here broke, and that unleashes some energy to go this way. There's new buyers coming in that have a belief that all of this was gone. So he was early in that move, like a second mouse. And here's the payoff, that it puts him in a really good position on daily and weeklies that this thing could really go. STLD, Steel Dynamics. We looked at these guys earlier this week. They are free and clear and breaking out of that weekly resistance level. That's all this. Leaving that behind and going. He's got his entry at 103. Suffered a little bit, but now this is going. He's got $6 in hand. It's in great shape. It's at all-time highs. These guys have a great little company in Fort Wayne, Indiana, making steel. They have 3 different lines of operation, and they're looking good. Like them. All systems go. Wheaton Precious. This is it has left behind the weekly sell-off. That's all of this. And here was the last little residual support at 30. And now it's above 34. So that's all left in the past. Now you have higher lows all the way through. He waits for the third leg up, gets the emerging dragon above this. Now it's in good shape. And if it breaks above about 41, this could really go. Now this is being propelled a lot by the abnormal strength in silver. So Wheaton buys and sells production of all the precious metals. So they're benefiting from their silver position. If you wanted more direct look at silver, you could take a look at SLV directly and see where that real strength is coming from. ZSL is the double inverse of silver. So if this whole thing starts to collapse, you would expect to see a lack of follow-through in Wheaton. And you could protect it with a hedge in ZSL if you wanted to play weakness in silver. ZSL is the way to do that. SLW, Silver Wheaton, is another way to play all that. So tentatively, I like this. Merck has just been dominating the S&P and the Dow. It's left behind here, all of that resistance. He's got 1, 2 positions in already. It's had 2 higher lows already. So these are well in the money. And if this breaks out again, it's free and clear, and there's no resistance overhead. Merck is the clear winner in the farms that has a chance to really just go. Yeah, the weakening of the dollar index could continue. We're going to see. I'll just got to pull up the USD, the dollar index, and see where it is in its cycle. And you tell me if you think there's more weakness ahead. I think there is. All right, here's Coca-Cola, one of those consumer staples. So the question really was, after that big sell-off and it found support, there was an SSC. This little entry right here, that you see that resistance here? That's what all of this price action is in here. All of that chop is all. It's all the same people that were fighting it over it here. So you can see everybody that sold off. Here's where the bears won. Value players came in, and their early action allowed them to take this benefit. So he really is coming in late in this life cycle. So here's where the support was. That first brave move across the dragon and the PSAR flip, we would think of that as a second mouse, right? We would think of the brave mice that made this turn as the first mouse. That's brave. You can go ahead and be brave all you want. To me, the ideal position is that second mouse on the daily at around 56, which would have been somewhere in this region. After this reversal, there's a PSAR flip. The soonest you could get it was here. So this is really where the second mouse entry is, right in here. It has a big, strong run-up in 2 days to here. And what he's looking at is this resistance. So the question was, so close to resistance, should I have not entered? I still think you can make that play. But I think where I would want to be out is at break even. You lost only a fraction on that, but I would rather see you getting that in here instead of actually getting into the red, right? So on this 1, 2, 3, somewhere in this region is where I want you getting out in here. You ventured, it had a little bit of fun, but don't let that go negative, because now you're in that position of how much, like right down in here, how much longer was I going to take that? Now, the problem with this one was that was a gap. So it closed here. That was your last chance to get out of that thing at about break even, and then you got to experience that gap. Now, it turned out that that was just clearing out the inventory and setting that up, but you don't know that, and so you took a move that allowed you to get to zero. Now, what I would say is after this turning point, you have a crossing of the dragon, a breakout above here. So there's some moves in. Both of those are legit on the daily because it's looking like this. This is still respectable because you're getting that after it's cleared this resistance. So I like that 62. That's fine. And you let it get out of this shenanigans. And I think that's fine. You're buying it as it's emerging from resistance, and now the target is 65. There's still there's a $3 move in there, which you've mostly experienced. So I think this is fine. This was a good shot. You might have stayed a little long on that. And I like the patience to reset and get long here. So I think you're in good shape on this. And it's Coca-Cola. I don't see any major malfunctions in that one. Walmart has been really, really strong. It held support and then a breakout. Support, breakout, support, breakout, and now it has pulled back, found support around 150, and is starting to make that recovery run again. Now, Walmart from here, from 150, can get to 160 without any controversy. So there's a $10 move to the upside. So there's resistance, resistance. So your entry at 150 is playing for a move to 160. And you've probably got about a $2 risk on that. So you got a 5-to-1 trade in hand. And it closed well. And your $2, you're already at 1R. So if this breaks above 154, I don't see a reason not to give it another shot to play for $6 more. I think you're okay there. Boeing has been just on a rocket. It is cleared. It doesn't get resistance till 190. This held support. Here's a breakout above 180 waiting. Yeah, we'd like to have had this breakout in here. Can't get everything. But I think above 180, you're still geared into the strength of higher lows. And there's still a bunch of defense money going to get spent, and Boeing's going to benefit from it. So I think you're all right there. Treasuries, I'm going to show you my swing trades on this one. But that long move from 120 to 90, which is a minus 25%, reversed here. That long sliding PSAR broke. He takes the second entry like a Kata 2. That's in good shape. So an entry around 101. He's at plus 6%. And, the next resistance level is 112. So there's another $6 move in, and he's got a great start. Good shape. You can see even this leg off the weekly. 120 is in play. So if it can get to 112, then 120 is in play, back to what you'd think of as normal fair value. Yeah, my brother notes that we have a thing we're calling Trader X layout that's looking at weekly and 9-day and 3-day bars. And both Wheaton Precious Metals and Merck are looking pretty good. We saw Merck already, why that was good. All right, so that's Treasuries. Coinbase, I'm really liking this, by the way. I love Coinbase right here. So does Kathy Wood at ARK. So there's still institutional interest. I think this was the joy phase up to 340, sold off to 40. That's minus 90%. So all of the hopeful youth of America there. That was the first leg up to 120, from 30 to 120. That's a 400% gain, by the way. And it has come all the way back to 45 and 40. He's tried it a few times. Middling success, gets paid nicely here. That second position broke. He gets paid here. I like this thing right here, to be honest. I think if it was going to fail, it had opportunities to fail. That's the FTX scandal. They don't seem to have the same troubles. That means this is on value play, targets 64 and 56. It's speculative, but there's still meat on those bones. And I think they got some resilience. So Coinbase. Next up, PayPal. Financial services, a little bit better shape, less vulnerable. But what I love about it, look at the size of these swings. So this is, when you see swings of that size, you can get some interesting plays on the 65-minute, even the 30-minute on this one you might want to look at. And the fact that it's down here holding a higher support simply means that there's a move to 83 that's baked into the cake. Nerves, this is no place for a nervous person, but the move from 75 to 83 is +8. So if you could manage a dollar risk, you got 8 to 1. This is one where I might be looking at the 30-minute or the 10-minute chart if I wanted to sharpen my knives and get, well, you're in a great value position. You know, it's holding at long-term support levels, and a simple routine move to the top of the channel gets it to 85. Low risk trade. If that fails, you stop and reverse and you're going to get paid. So why not? That's a Godzilla, by the way. CRT, Cross Timbers Royalty. This is in the lumber space. It has cleared important resistance here. 3 layers of resistance, and is moving well, and is above all long-term resistance. That's a buy and hold to me. Get on it. I'd like to have seen us in around here after it cleared this, and now that it's cleared this, I'd love to have seen this, but we can still get in there. About a dollar risk. Plenty of room to the upside on that one. Natural gas. This trades in that channel between 32 and 18. It's in the bottom end of that. It's at 19, so it's in the very bottom of the long term. This one we should do better at capturing, but we didn't lose money. We should, somewhere in here, we got to maybe get a better entry. But you avoided that, which is key. If this holds, there's this thing has moved. Look where it's moved from this support. 1, 2, 3, 4. I would almost call that a second leg up. So there's a lot of willingness to buy the raw material of natural gas around 19. So where's the risk? Pick this as a, use a dollar stop, and now you have a couple targets from 19 to 21, 22, 23. You got plenty of upside, even if it just stays inside the channel. Just treat it as a commodity with an intention to buy and sell inside that channel. What's nice is that the channel itself has turned after this long slope. Being able to get it here, you're really buying on the side of value in here. And you're using 18 as the bottom support level. That's been pretty strong. And then if it fails, just take it. Low risk. Starbucks. I don't see the fascination. But there's the resistance that has cleared 1 leg, 2 legs, and still going. I don't know how they can stay in business with now that they're starting to unionize. That should be the death of them. But in spite of that, it's still working. So who are you going to believe, me or your lying eyes? Logically, there's still some room up to 116. I think there's better plays, but that's a pure momentum play. Hate the company. You could persuade me that this breakout has some positive. It's left all this behind. But what you're really playing for is you're just hoping to see it get to 114. So that's a $10 gain. So if you buy it at 105 and your stop is 3, it's a 3-to-1 standard momentum swing, and that's all it is. There's no long-term value in that company. There's no way it can survive. At some point, McDonald's would buy them if they were smart. All right. I mean, it's really just McDonald's for hippies. So here's your resistance levels. in end phase energy, and it has closed above that and looking good. It's long, no resistance whatsoever. That's an all-time high. That's safe. And solar, maybe now's the time to break out with all-time highs. All right, that's everything that we got there. I want to just run you through and I'm going to start adding this to our future Sunday nights or Saturday nights.